The Monetary Policy Committee of the Bank of Uganda has maintained the central bank rate at 9.75%. According to the Governor, Michael Ating-Ego, the decision is aimed at preserving price stability while allowing the bank time to assess global developments and their potential implications for the inflation outlook.
The CBR band is maintained at plus and minus 2 percentage points, while the rate discount and the bank rate remain at 3 and 4 percentage points above the CBR, respectively, resulting into a rate discount rate of 12.75% and a bank rate of 13.75%.
Although exchange rate pressures have also eased, with the Ugandan shilling stabilizing after depreciating earlier in the year, however, the bank says the inflation outlook remains tilted to the upside, with global and domestic risks continuing to require close monitoring.
Of course, there are risks to this outlook, and they broadly remain tilted to the upside, including prolonged inflationary surges, which would promote major central banks to raise interest rates, thereby increasing depreciation pressures on the shilling due to capital flight to safety. Also, we have escalating geopolitical tensions, which could disrupt global supply chains, push up international oil prices, and raise domestic energy and transport costs.
Meanwhile, the Bank of Uganda projects economic growth of between 7 and 8% in the 2026-2027 financial year. Governor Michael Ating-Ego highlights the key factors underpinning the positive growth outlook.
Growth is projected to accelerate to between 7 and 7.5% in the financial year 2026/27 and around 8% over the medium term. This projected growth is supported by prudent monetary and fiscal policies, remittances inflows, higher investment and exports boosted by the oncoming oil production. In addition, the continued implementation of the government's tenfold growth strategy is expected to accelerate growth in the strategic sectors and promote exports through value addition and increased agricultural production.
The Bank of Uganda says it remains committed to promoting price stability in support of Uganda's social and economic transformation, and emphasizes that future monetary policy decisions will remain firmly data dependent, guided by the evolving economic outlook and the balance of risks. Dennis Igoa for UBC.